Welcome to the Black Appalachian Coalition's podcast entitled Black Remembering, where we will bring to you the heavy and the hope across the Ohio River Valley. We want to remember who we are, where we've come from. We want to speak to the oral history of what we've done, what we've achieved. We want to speak to the ills that we have experienced while also finding solutions to those problems, those issues. We want to deal with the narrative that has kept us deeply rooted in despair. Now we want to punch through that narrative and stand up and say, we are remembering our Black past, and we are rooted, and we are here to stay. Welcome to Black Remembering. We hope that you find your place, your space, and your voice in this podcast.
Hello, beautiful people. Welcome back to the Black Remembering podcast, where we highlight the heavy and the hope. We are continuing our The Tea on Taxes series, and this is an informative session being led by Sonja Jones of GIP Financials. I'm going to read off 10 questions, and Sonja Jones is going to answer with her expertise. Thank you so much. Let's get started. Question number one. What's the connection between your HR hiring paperwork and your taxes?
All right. So the most important document in your HR paperwork regarding your finances is going to be the W-4. The W-4 is going to be the information that you're going to put on the form that's going to talk about how much federal taxes will be withheld from your salary, whether you're married, whether you're single, whether you're head of household, and the number of dependents that you have. Hopefully, the employer also has the instructions for the W-4 for you to look at. But if not, go to the irs.gov and click on the tax withholding calculator. And it will also give you, a little bit of information on, based on your salary, how much should be coming out. Because, and I'll also say too, the W-4 can be changed throughout the year. If you complete it at the beginning of, your work experience and you get your first paycheck, you notice that there isn't, well, I'll probably say the second one, because the first one might be retro, right? So the second one, you notice you don't have any federal income tax taken out because it's going to be federal, it's going to be Social Security, and it's going to be Medicare. Then you'll have unemployment, right? But that's more likely state. It's a mix of federal and state. But federal income tax withheld, that's the main one that you want to look out for. If you don't see anything coming out of there, I want you to immediately go to HR and say, may I look at my W-4, find out how you filed it. Before, you might have to take your dependents off. You might have to, change who you are from head of household to single or something like that, just so those taxes can start coming out. Because I would rather you have more taken out and get the refund at the end, as opposed to you not getting your taxes, not having taxes taken out, and then you end up owing and you don't have any, money to, pay for it, right? So the W-4 is always going to be something that you should be looking at throughout the year, at least once a quarter, but definitely after you get your taxes filed, for sure.
But what is the difference between a W-2 form, a W-4 form, and a 1099?
Good question. So the W-4, like I said, that's what you're going to fill out when you first get your job. That's going to let HR know how much federal income tax should be withheld. The W-2 is what you get at the end of the tax year, the calendar year, January, December, right? So between January and February, you should get that W-2 that's going to show you how much gross wages your employer paid to you, how much federal income tax was withheld, how much Social Security, how much Medicare was taken out. Sometimes they'll also let you know, like if you have any like special retirement or something like that, it'll show you, and that's depending on how the employer structures the W-2. But the big parts of it is going to show your wages, your federal income tax, your Social Security, and your Medicare. And then also, if your state does income tax, it'll also show that information as well. Now, the 1099, that's for what we call, not for the sake of this conversation, non-employee compensation. So for contractors and freelancers, okay? So if you are providing a service to another business, and they pay you over $600 or more. Remember I talked to you about the W-4, right? The contractors have a similar form, but it's called the W-9. The W-9 is basically going to identify you as that freelancer or the contractor. If you have a business, you're going to put your name, the name of the business. I'm pretty sure most of the people watching this are going to be single member LLCs, so you're going to be taxed as a sole proprietor. And then you're going to put either, if you have a business that has an EIN, put that EIN. But if you're just operating as yourself and you don't have a business and you don't have an EIN, put your Social Security number. Okay. So at the end of the calendar year, the 1099 is going to reflect how much you were compensated for that particular job that you did. Now, keep in mind with the 1099, there will not be any taxes taken out. So when you get that 1099, you're going to have to submit it with your tax return and report that income. Okay?
I'm a touch base with you on that one because I think I messed myself up in previous years, not knowing the difference between a 1099 and other one. So thank you. Um,
Mhm.
can we only pay taxes at the beginning of the year during tax season?
Okay. So if you are a business, you can pay your taxes quarterly through a platform called EFTPS. And so what happens is if you're running your profit and loss statement, if you are, and we're only paying taxes on the profit, y'all, not the gross, the profit, right? You do it once a quarter. You enter in whatever your profit is. They'll let you know how much taxes you need to remit, and you just pay it online. Right. Now, from a personal standpoint, if you have a tax preparer that's doing your taxes, um, depending on how you did the prior year, whether if you owed or nothing like that, if they see that you're probably going to keep that same, cadence, they may recommend that you pay estimated quarterly taxes. And if that's the case, the tax preparer will give you, it's like a little voucher, and they'll, have the amounts on there, stuff like that. So there's two ways that you can do that.
Thank you. What is a tax plan?
All right. So the best way I can describe a tax plan is the long-term plan for you to pay the least amount of taxes. That's the best way I can put it. Of course, everybody's situation is going to be different. I think the most common scenario I can use will probably be retirement. Right. So say, for example, as I'm 45, right, and we have a tax preparer, Latasha Phillips. She's our tax lead. She also does quite a bit of tax planning for clients, and that's one of the things she loves to do. So if she's sitting down with me to, file my taxes and review my stuff, she's going to be looking at, going down the road, like what investments do I have? Do I have any traditional 401ks? Do I have any Roth IRAs? Things like that to start looking at by the time I get to 59 and a half, when it's time for me to start pulling out my retirement income, if I so choose, what's going to keep me from paying the least amount of taxes as I get older. Right. So that's an example of what tax planning is. Now, if you got a business, that's another situation, right? That they'll, kind of look at how much you're making in your business and start looking at down the road, what's the best way that's going to keep you from having to pay as much taxes or the most amount of taxes. We want to reduce that to as little as humanly possible. So that's what tax planning is. So there's different strategies, different investment vehicles, and things like that that you can use.
Thank you. I think I was only thinking about it in terms of like yearly taxes, but wasn't even thinking about retirement and future moves like that.
Mhm.
What are some potential write-offs that most people are unaware of?
From a business standpoint, I can definitely say professional development, advertisement deductions. Remember the two key words here: ordinary and necessary. The tax deductions have to be ordinary and necessary for your business. I cannot stress that enough. Also, I can definitely say just your regular like office supplies. If you're doing mileage from your business, because we don't be taking, we don't be writing that stuff down. We don't be writing that down. You leaving money on the table. And another thing, another big one, if you're using like any type of merchant software like PayPal, Square, Stripe, things like that, when you get that payout that goes into your bank account, you're getting the what I call the net, right? Like say if you have $100 product, by the time Stripe get hold to it, it's taking out, transaction fee, then you get $97 just for easy math, right? That $3 in merchant fees, that's tax deductible. A lot of folks leaving money on the table for that one. That's a big one. That's a big one. And so, and another thing too, especially for businesses, if you are um, getting your business taxes filed, and this is commingling. Now we're talking about commingling. If you put money into your business checking account, like you work a 9 to 5, you put $500 in there. That's not business income. That's what we call equity. What you don't want to have happen, or say you got an uncle or auntie to give you some birthday money, you put that birthday money in your business checking account. That is not earned income, right? So you want to make sure that whoever's doing your taxes is not just calculating all your deposits and all your expenses. They need to be taking a deeper dive into what those deposits are. Because if you got a loan, if you got $100,000 loan, what if your taxpayer count that as revenue? That's not revenue, that's a liability, that's a loan, right? So you got to look out for those things. Also, we've been pop some folks on the hand. Your expenses, all them Starbucks, and you take that, you got that debit card from that business. I want you to take it out of your billfold, take it out of your purse right now, and go lock it up. So all that swiping, like Dora the Explorer, swiping, no swiping, all that swiping, gonna get you caught up. And then when you say, like at the end of the year, your tax preparer, hey, girl, you did a good job. You made a $10,000 profit. She like, how? I only got $1,000 in my checking account. You spent it. Hello, Starbucks. Hello, Top Golf. Boop. You spent it. That's the difference between cash and profit. So we gotta stop all that commingling, and we gotta start organizing, some things. Like I said, especially with your tax preparers, you got to make sure that they are not just taking your statements and just, taking them totals off the top of the beginning balance and ending balance. Not don't, right? This is why it's so important that you have to have a bookkeeper and a tax preparer. If you're doing it right, you should be paying separately for bookkeeping and tax filing. If you're doing it right.
I did not know that. In my mind, it was
Mhm.
just go to one person, go to the tax preparer. So
Yeah, you can't assume that, because they just trying to, they trying to get through the load. It's tax season. They trying to, whittle through the list, right? They got a pipeline. So you just got to make sure that when you send them stuff, you got to have that stuff already organized.
thank you. So most people I know are holding down at least two jobs at a time. Uh, and with the possibilities of the internet, a lot of folks are starting their own small businesses, starting their own YouTube pages that they monetize, doing hair, nails, and lashes, and offering freelance writing services. So even if you drive rideshare or make deliveries through Instacart. This is the age of the side hustle. So, what advice would you give to those of us who are holding down a side hustle?
Absolutely. So remember when we talked previously about the difference between the W-2, the W-4, and the 1099. And I talked about the 1099 is not going to have any taxes taken out. So that's going to be most of your rideshare, your YouTube monetizations, all of that. When you apply for those types of gigs, you're going to fill out a W-9, right? But the good part about that is if you got a 9 to 5, you can go back to that W-4 because the W-4 has a section for if you have additional, jobs, you can withhold an extra amount of money, right? So say if you're doing Uber and you're making about $200 a month, right? I would take that W-4 worksheet, estimate how much you're going to be making at Uber a month. We'll do that worksheet so you can figure out how much extra tax needs to be withheld from your 9 to 5 job. That's going to keep you from having to owe at the end of the year. But also with that, with those types of gigs, make sure that you understand what deductions are available to you, right? So if you're making YouTube, right, what equipment are your cameras and your opus clip and all that type of stuff, whatever you use that's ordinary and necessary for you to make that YouTube content, you can deduct that from how much you're bringing in. If you got Uber or DoorDash, gas, right? All that type of stuff. If you're doing the regular Uber and you keep snacks in the car for people and all that, you can deduct that, right? Because that's ordinary and necessary. You trying to, right, them perks, right? So those types of things. So you just have to make sure that you're fully aware of what those things are. But remember, ordinary and necessary. So, but that W-4 is a game changer. So,
Thank you. If y'all haven't been taking notes thus far, please go ahead and hit that rewind button, get your notepad out, and make sure you take some notes. I'm definitely going to take note on the on what can be written off with the side hustles. Our next question is: I think it's safe to say that most folks start thinking about taxes at the beginning of the year. When do you think is the best time to start thinking about our taxes?
there's never a greater time. As soon as it pops up in your mind, that's when you need to start thinking about it. But I'll be honest with you, a lot of people don't start thinking about taxes. I would say from a personal standpoint, a lot of folks don't think about taxes until January. By that time, damage already done. Right. You wait on the W-2 and everything that you could have done to kind of help reduce your tax liability, you should have did that last year, right? So when you get your tax return, like for right now, since we're doing the 2024 tax return, whatever your tax preparer tell you to do, start doing it now, right? Start doing it right now for the rest of 2025. From a business standpoint, I would definitely say, like right now, as we're filing taxes, right? We're trying to get, taxes done. But quarter 2, hopefully this is the way we like to educate our folks. So by the time you get to your tax preparer, you're looking at 2024, right? You should have already had some 2025 goals already set in your mind. So when you get your 2024 taxes, you're looking at 2025 goals. Based off the data that I have here with 2024 taxes, are my 2025 goals realistic? Do I need to tweak them? Right? Run the play quarter 2, quarter 3, we need to start going back and looking at, your financials. Hopefully, if you have a bookkeeper or if you got an expert, you should be looking at your numbers every month anyway, right? But quarter 3 is definitely going to be where, all right, let's look at how much profit you got. Let's look at how much loss you have. Let's figure out how we're going to make this thing work, right? So especially if you have like a significant amount of profit, which will what we want. But if there are opportunities for you to bring that tax liability down, like to prepay rent or prepay those expenses that we know you're going to have. We just not out here balling out on office furniture just because we trying to get the bill down. We're gonna prepay the rent. We're gonna prepay, some of these other services. Because if you do that, there's a good chance you might also get some, a discount, right? We're going to be really strategic with that. So that's how we normally, think about tax strategy. Like I said, for business, Q3 is really going to be the time where we're assessing to pivot. But from a personal standpoint, as soon as you file those taxes and you sit down with your tax preparer, run the play, do whatever they tell you to do.
So we're recording this in 2025, and what I'm hearing is that we should be already thinking about and making moves for our 2026, maybe even 2027. But we should be thinking in terms of the future and not in terms of right
Correct. And I will also say this from a personal standpoint, since we are recording is February 25. There are some tax deductions that you still can take, like, retirement contributions and things like that, that you can take for 2024 up until April of 2025, right? So you just have to be aware of those things. So there's still some hope.
now. Got a couple more months.
Yeah, exactly.
What advice do you live by when it comes to your own taxes?
One is just being organized. One of the things that I do, I have this thing called a tax box. It's just a rate you try. You can just use an Amazon box or have you a banker's box on the things you get from Office Depot, and every piece of mail that is important to you, right? You put it in that tax box. I say once a quarter, you need to go in there with some Post-it notes and organize that stuff. These are my mortgage statements. These are my credit card statements. These are my, medical bills, things like that. Keep all those things organized, because once it comes tax time and you need to go through and sort, things out, it won't be a whole mess. Then in January, once you start getting W-2s and 1099s and the IRS PIN numbers and all that, I get a manila folder. I write important tax information because all those particular documents go in that manila folder, right? That's the thing for the health insurance, the 1095s and stuff like that. All those go in the manila folder. So in the event, God forbid, if you get audited or your tax preparer is asking you about something with your credit cards or something, an expense that you had, you can go back, since you already got everything organized, go through your Post-it notes, you get all your Chase, your Bank of Americas, whatever you use. You can take that statement, pull it out, bam, there you go. So being organized is going to keep your tax liability low. You know how they say when it comes to real estate investment, right? You make the most money depending on how low you buy that property for, right? It's kind of the same thing with taxes. The more organized you are, I guarantee you the less you're going to pay in taxes.
That was to the audience, but that was also straight to me. I promise when I get all of these documents in, I'm like, okay, I'm gonna put them in a corner on my kitchen counter, and then I'll come back to them when I need. That's not sustainable. So thank you. You gotta stay ready, so you gotta get ready.
Oh, I got one other thing I want to say too, because we do a lot of things electronically by email. Create you an email folder that says 2024 taxes, 2025 taxes. So whenever you get a receipt, for my business owners, if you get all them Amazons and all those receipts, move those things over, right, to that email address. If you get 1099s, because a lot of our, you get 1099s or tax statements and stuff via email, move those things over to that tax folder so you'll have them there as well.
Thank you.
Mhm.
In general, what are your top three most important financial tips?
All right, so the first one is we got to get our financials organized. I know a lot of people don't like the B word budget, but we got to do it. Basically, you're just taking the money that you get from your direct deposit. Where's this money going? Right? Every penny needs to be accounted for. All right. So that's the first thing. We can't be afraid to budget and organize our financials. Two, change is inevitable. The budget is what I call a living, breathing document. So you're not a failure if The budget that you set in January is totally different by the time it hits December. Shoot, it may change in February, right? So change is inevitable. The best thing that you can do is pivot, get wisdom, get some experts, get some wise counsel around you to make sure that you're doing the best thing with your money, right? And then the third thing is give yourself grace, right? Because life be life and honey. It be life in, right? And so as you're trying to figure out what works, you're going to goof, you're going to make some mistakes, right? But the more, wise counsel that you have around you, that you got to put some, some guards around you that'll help you soften the blow. The blows are going to come, right? But we just want to make sure that the blows aren't as hard. So those are my three things. You got a budget, don't be afraid to change, and give yourself some grace.
Thank you. Should our audience desire to contact you for your accounting expertise, tax related expertise, is GIP Financials currently available for consultations? And if so, what's the best way to book?
Yes. So we do have a website, gipfinancials.com. We have on our website a discovery call, but that discovery call is specifically for those who are looking for done for you monthly bookkeeping. So, Nita, I will send you a customized link for consultations for your audience. It'll be a discounted rate, and that's what we'll do for y'all. So,
Thank you.
mhm.
Feel special. Thank you.
Yeah.
Well, y'all heard it first. We will include all of this information in our show notes, especially the Calendly link. Thank you again so much, Sonja Jones, for imbuing us with your wisdom. And again, if you were not taking notes, do yourself a favor. Go back and take notes. Spread this good news with your loved ones and your community. And until next time, peace and blessings, y'all.